Good afternoon, everyone. Today is Monday, the 9th of May, 2011. This is Brian Shannon from AlphaTrends.net. Let's take a look at this market here. As with previous Mondays, this video is brought to you by Realtick, Realtick.com. That's the site to visit for the trading platform that I use here that you see each time, which is Realtick. So the S&P 500 was up 52 cents. We had really light volume in here today, just a real quiet day. But it continues to hold up above that 134 level, which has been the basis of that inverted head and shoulders pattern that we've been looking at, and also holds above that rising 20-day moving average. When we take a look at the 10-minute time frame, so we can kind of see that 5-day moving average, we had found resistance on it on Friday, and then again today we're having a little bit of trouble with it, but it might be looking like we're seeing higher lows in here, and really I think the bigger level of resistance to clear for this market to for us to be able to say the buyers have taken control is if we can get above and hold above 135 and a half for about 30 minutes or so. Doing that, I think, would tilt the odds back in the favors of the bulls. And certainly we've got a bullish looking daily chart, and of course the weekly time frame continues to look strong as well. The low volume is suspicious that we had a low volume rally, but this could be indicative of what's coming ahead for the summer months. We generally just want to give the benefit of the doubt to the buyers in an uptrend, but to obviously be very risk averse if it starts moving against us. Moving back below probably 134 level would give us reason for some concern. So back below 134, perhaps we're going to go down to visit that trend line in the 50-day moving average, which now resides at about 132.20 or so. The Nasdaq was up slightly as well, up 22 cents. This is the bigger level in here that it needs to really contend with. That's the highs for the year that are basically up at about 59 and a half. When we take a look at that 5-day moving average, we can see it's been very choppy in here. This was the level we were watching last week. Actually, 58.80 was the level we kept referencing, and it looked on this day like maybe the buyers were going to take control, but we still don't have clarity in this market. I think we need to clear these highs from last night at about $59.35 in order to have any conviction that the buyers are going to be in a place to take control and hold control over the intermediate term. On the downside, really about 58.10 or so was an important level of support. That's kind of this prior level of resistance as well, and that location of the 20-day moving average. So 58 basically, let's just call it 58 even. I think breaking below that, then maybe we get the same thing, which would be a test of maybe not that trend line because it's so far away, but perhaps that 50-day moving average. So the battle lines are drawn in here. We know the important levels, and we just have to be patient enough to allow the market to clue us in as to what's next. The risk or the danger is, I suppose, that we get another move like we saw last time we were flirting with the 5-day moving average, and that is that the market gapped away from that level. So that's the risk, and that's the basically opportunity cost for not being involved. And if you're comfortable with the bigger picture trend on the daily and weekly time frame, then you probably should be holding positions long in here. And on a case by case, stock by stock basis, there are still some good stock setups out there. The Russell 2000 is above the 5-day moving average. The 5-day moving average is still declining, so it's kind of tough to trust it, kind of like what we saw back here in mid-April, where it breached that 5-day moving average, but the direction was lower. Typically, these rallies do not hold. They're going to need to maybe see a pullback and then a break past I think really 84.50 is the key level for the Russell 2000. If we gap above that level and kind of have one of those scenarios where we gap up, run for the first 10 minutes, pull back, let it settle in, and then see if it regains that volume weighted average price after the first half hour, 45 minutes or so, because those are usually excellent buy points with a stop below the low of the day. So what I'm drawing in here is maybe about 45 minutes worth of trading based on, if we closed right here and gap up to, let's just say 85 or so tomorrow, whatever the level is, if we get a gap. And I'm not predicting a gap, I'm just saying here's how we would want to trade it if the market presents us with that tomorrow, because this has kind of been the trend a little bit, that we gap above that 5-day moving average. That's the red one there, and then begin these rallies. So it's something you want to be aware of. We've tested that trend line in the 50-day moving average here in the Russell 2000. If we break back down through, now we've got a normal pullback. What would be nice to see is we pull back to the 5-day moving average and we create a higher low somewhere in about 83.50, and then perhaps on Wednesday or so we can add a higher high to that. So still just a little bit near term neutral and uncertain. Adding to that uncertainty is the semiconductors. They had broken that important level last week of 36.85-ish, and again, looking back to the weekly time frame, that's been an important level here as well. Let me just put a horizontal line on there, and you can see that it was prior support in 2007. If I back it up a few more weeks, which is easy enough to do here just by clicking on the number of weeks, we'll go to 300. You can see that that's been an important level in the past. This 37 what was 36.75-ish. So if this market can clear back up through that, that's a good thing. But what gives me a little bit of near-term hesitation is that when you see a market consolidate under highs that have been important, in this case for nearly 2 months, it consolidates, makes that higher low below them, breaks out, but then comes back in quickly. It always reminds me of the phrase, from failed moves come fast moves. So it's not bearish by any means, but we have to be very careful with these semiconductors, in particular if they break below about 35.80 or so. Doing that, I think then you're going to see probably, and 35.80 is approximately where we're going to have that 20-day moving average tomorrow, maybe a little bit lower, but then it puts the 50-day moving average into play for the semiconductors. The financials are also a potential problem here. You look at, Citigroup did their 1-for-10 reverse split today. That didn't help the stock at all. It usually doesn't, but it gets back about 46.5, maybe things could be on. Citigroup's really more neutral than anything, but has the potential to go get pretty ugly with a declining 50-day moving average. I think the one that looks worse there is JP Morgan, which is having trouble with this 50-day moving average, and kind of looks similar to the financials. This 43 level is very similar to the financials, the XLF that is, being down near about 1580. So the financials are still reason for near-term hesitation. I think they need to probably clear 1625 to 1630 for the buyers or to breathe a little bit easier in there. Real quick, let's just talk about this silver as well. Silver, as we know, got smashed today. It gapped way up. It did have some good volatility in there. I didn't trade this one today. I made a vow not to trade it. I wasted enough time with this last week, but it's maybe going to head up towards this 38 level. That's where we had a gap down from. That's where the 50-day moving average. If you're looking for a big bounce that's going to sustain itself, it's not going to be identical to this, but I would say that look at how the uranium's traded when they had big fear based on the Japanese disaster. Now, again, that was based on a big news story there, but it did get a good dead cat bounce, and then typically, if they don't scare you out on these precipitous drops, there is usually at least a retest of those lows, and they'll generally scare you out.